As a director of a company, you're at risk of catastrophic personal financial loss if something goes wrong because of how you run your company. You might have heard of D&O and you might be sure you don't need it. It's just another expense to add to the long list of insurance expenses you already have. But those insurances are for the company. You've bought them because without insurance, the cost of rebuilding your premises would bankrupt the company, or paying compensation to an injured employee would damage the company. So you buy insurance to protect the company. What about you though? What protection do you, as a company director, officer or manager, have if something goes wrong? There are many misconceptions about a company director's liability and risks. Number one, I run a limited company, so my liability is limited. No, that's not true. In a private limited company, it's the owners whose liability is limited. If the company goes bust, the maximum that the owners can lose is what they've already invested. If a director is sued, there's no limit to the amount that they can be sued for. Even if the director is also an owner, they're still exposed to catastrophic financial loss when acting in their capacity as a director. The liabilities of a director and a shareholder are separate and distinct, even when the same individual holds both titles. Shareholders' liability is limited. A director's liability is not limited. Who can bring an action against the director? The company can bring actions against a director where it believes that director is not fulfilling their duties to the company. Where the company has suffered a loss as a result, that director may have to make payments back to the company. Creditors and liquidators. It's illegal to trade when a company is insolvent. If insolvent, the directors must immediately wind the company up. If they fail to do so, they can be made to contribute personally to the company's debts with no cap. And we have examples of company directors being forced to sell their family homes in order to settle company debts. And it's not sufficient for a director to claim that they didn't know the company was trading insolvently. The Insolvency Act of 1986 says that a director is guilty of wrongful trading if they knew or ought to have concluded that the company would go bust. And that's such an important phrase. It means that you should know if your company is likely to go bankrupt. For many company directors who aren't experts in accounting, it can be difficult to spot these issues, and they are therefore vulnerable. With a D&O policy, there's protection if mistakes happen. It could be your only protection against losing your home. Regulators. The HSE, the Environment Agency, HMRC, the BIS, the CMA, the SFO, Ofcom, Ofgem, Ofwat, the ASA, the FSA, the DMA. There are many others. Every sector of industry has regulation. And if a company breaches those regulations, then directors will be investigated and or prosecuted. These actions can lead to huge defence costs and, in a worst-case scenario, a jail sentence. Let's take the HSE for an example. If someone is killed at work, the HSE will investigate and maybe prosecute the company. And the employer's liability policy will usually pay costs for this. But if it's determined that an individual director or officer has acted wrongfully, the HSE can prosecute them personally, and the EL policy usually won't respond, meaning that individual is liable for the costs of this defence. At Zurich, we recently had a claim for the owners of a car park where a lady was run over and killed, where we paid out £338,000 defending the company directors. In the last 5 years, there's been a 400% increase in the number of HSE prosecutions of individual directors alongside the company. Employees. Employment tribunals are brought when an employee feels they've been treated unfairly or discriminated against or harassed. In any 1 year, roughly 40,000 fires affect businesses in the UK. And businesses always insure against fires. But in the same year, there are roughly 220,000 employment tribunals. But very few companies insure against this risk. Misconception number 2. If I'm sued, prosecuted, or investigated, then the company will pay my bills. Actually, that's right. The company can protect you. But the question is, who protects the company? I don't know of many companies that can afford the hit to their balance sheet of £338,000. But the D&O policy has a second protection that says where the company has protected you, we'll reimburse the company so that it won't go bust defending you. Misconception number 3. It's expensive. That's not true. Zurich's premiums start at £100 plus IPT. That's less than £10 a month to protect you against devastating financial loss. Misconception number 4. It won't happen to me. People think they're not vulnerable to a D&O claim because they run their businesses well. But you don't have to do anything wrong to be accused of doing something wrong. There's the CEO of a charity providing a hostel for young people who was accused of having raped a service user. He hadn't. But the cost of defending him was enough to force the charity out of business. Misconception number 5. D&O isn't important. D&O claims don't happen often. But when they do, they have the potential to ruin the lives of directors as well as their families. So, instead of leaving D&O till the end of your conversation with your broker, why not make it the first topic? Before you worry about protecting your company, why not get you and your family protected first? If you're still unsure about D&O, ask your solicitor about it. Any good lawyer will tell you that this is a must-have protection. Brents Insurance work closely with Zurich to provide you with a market-leading D&O product that's constantly reviewed to ensure that you're getting the maximum protection at the most affordable rates.